What if I told you that the biggest difference between staying broke and becoming a millionaire could start with just $1,000? Not because 1,000 is a life-changing amount of money, but because it is the first time your money starts working harder than you do. If I lost everything today and had to start over with only $1,000, here's exactly what I would do. And before I tell you where I would invest, let me tell you the one mistake I would never make. One, I would never put all 1000 into one hot stock. Not Nvidia, not Tesla, not the next AI company everyone's talking about. Why? Because that's not investing. That's hoping. History has shown us that even some of the world's greatest companies have fallen 30, 40 or even 70% before recovering. And if all your money is riding on one company, one bad year can wipe out your entire confidence before your portfolio ever has a chance to grow. So instead of chasing the next big winner, I would build a system. Step 1. I would first build the foundation. The first $600 goes into low cost S&P 500 index fund. Why? Because with one investment, you are instantly buying pieces of 500 America's largest companies. You name it: Apple, Microsoft, Amazon, Nvidia, Visa, Johnson & Johnson. So instead of asking which company will win, I am investing in the long-term growth of America's biggest business. And that's what you should do as well. Historically, they have created enormous value over time. Over many decades, the S&P 500 has averaged roughly 10% annually before inflation. Although return vary from year to year, but most people think investing is about finding the next apple. The truth? Sometimes it's simply about not missing the growth of the next 500 winners. Step 2. Learn with real money. Yes, the next $200 goes into one or two individual companies. Not because I'm trying to double my money next month, but because I want to become a better investor. What does it mean? So when you own a company, you start paying attention. You read earning reports. You learn why profits matter. You notice how CEOs make big decisions, and you begin to think like an owner instead of a customer. So even if that investment goes down, the education could be worth far more than the money itself. I would much rather make a beginner's mistake with $200 rather than with $20,000. Step 3. Protect yourself. The next $100 doesn't go into the stock market. It goes into the high yield savings account. Yes, and you ask why? Because life doesn't care whether the market is up or down. Your car breaks down, your laptop dies, a medical bill shows up. Without emergency cash, people often sell great investments at the worst possible time. And yes, that has happened a lot. So building wealth isn't just about earning higher returns. Sometimes it's simply about avoiding expensive mistakes. Step 4. The investment that can beat any stock. The last $100 goes into the investment with the highest potential return, and that is yourself. A course that teaches a valuable skill. For example, books, learning AI, sales, public speaking, negotiation. Just think about it. If spending $100 helps you earn an extra $500 every month, that's $6,000 additional income. No stock can promise that. The more you earn, the more you can invest. And that's how wealth starts compounding even faster. The lesson nobody talks about. Here's the funny thing. Your first 1,000 probably won't make you rich. And you know why? Because you have to keep investing. But it will change something far more important: your identity. The day you invest your first dollar, you stop asking, what can I afford to buy? And you start asking, what assets can I own? And trust me, that is a huge thing. And that's the mindset that separates consumers from investors. Most people spend years waiting until they have $10,000, $50,000 or $100,000 before they start investing. But almost every successful investor started with an amount that felt small. Not because it made them wealthy overnight, but because it taught them a habit that lasted a lifetime. So if someone handed you 1,000 today, would you spend it? Or would you invest in the future version of yourself? Because one decision today could completely change where you are 10 years from now on.